Welcome, G traders. Stock markets in Japan and Australia extended gains in the morning amid a rally on Wall Street. Yesterday, all three main stock indexes closed with an increase. However, in the Asian session, the US stock futures resumed their decline again. Find out the reason in our video review. Let's start. The earnings reports of the tech giants turned out to be a big disappointment for investors. Shares of Alphabet and Microsoft fell by 7% after these companies reported lower revenues and unveiled weak fourth-quarter outlook. The reports were released after the closing of the US stock exchange. It helped traders avoid sharp price swings on a Tuesday. Asian stock markets rose mainly amid a drop in the government bond yields. The US 10-year Treasury yield, the benchmark for borrowing cost worldwide, dipped by more than 4% in a day. As seen on the chart last week, it reached a multi-year high of 4.3%, and now the 10-year government bonds are trading at 4.07%. What is the reason for a sharp decline in the US government bonds? Analysts believe that the US Treasuries moved down because of expectations and concerns about the Fed's monetary policy prospects. Investors make their own conclusions by assessing the tone of speeches and hints in the comments of Fed officials. Speculation about a slowdown in the pace of a monetary tightening was fueled by the article in the Wall Street Journal, as well as the San Francisco Fed president remarks. Mary Daly said that it's time to discuss the possibility of a less aggressive rate hike in December. Given the fresh economic reports, previous rate hikes have already had a positive impact on the economy. These factors were enough to revive hopes for a less hawkish stance. If the Fed stops raising rates, other countries will follow suit. The US dollar plunged to multi-week lows versus its main rivals due to expectations of a dovish stance and a falling US government note yields. As traders have already priced in a 0.75% rate increase in November, now they are mulling over the size of the rate hike in December. The Wall Street Journal suggested the possibility of a smaller rate hike at the December meeting, so the greenback has lost steam because of the hopes for less aggressive tightening at the end of the year. It was consolidating at 110.14 in the Asian session. It's likely to slide in the bearish channel of 110.03 and 111.14. The yen managed to regain ground amid a decrease in the US Treasuries and the US currency. On the top of that, today, Japan's top currency diplomat Masaru Sakundo said that once again the government is closely watching the sharp movements of the yen. All the market participants are already used to such verbal warnings. The yen rose sharply in the last 2 hours of the Asian session. Many analysts wonder whether the yen advanced to meet verbal intervention or a direct one. There have been lots of drastic increases in the Japanese currency recently. This is why investors believe that Japan has undertaken interventions without announcing them. In Japan, the Minister of Finance, not the central bank, is legally authorized to conduct interventions as a means to achieve foreign exchange rate stability. The Ministry of Finance also warned that it might not tell about the intervention to exclude speculative trading of the yen. The dollar-yen is moving today in the price corridor of 146.72 and 148.41. It's now trading at 146.97. The Australian dollar went up amid macro stats. Australian inflation raised to a 32-year high last quarter. The figure soared to 7.3% from 6.1% on an annual basis. On a monthly basis, inflation reached a 4-year high. The question is what measures the Reserve Bank of Australia is likely to take, given that the regulator has been trying for a while to push CPI to the 2% target level. The next Reserve Bank of Australia meeting will take place on November 1. It appears traders are awaiting an aggressive rate hike as the Australian dollar keeps growing following inflation data. Its upward movement is strong even despite falling oil prices and China's commitment to a strict zero-COVID policy until next year. In the Asian session, the Aussie approached 0.6494. It's moving in the upward range of 0.6373 and 0.6496. The US dollar is likely to get stuck in the narrow range ahead of the FOMC meeting, so the Aussie is sure to take advantage of it and drift higher. And that's all for now. Thanks for watching, subscribe to our channel and keep close tabs on the market developments with us. See you soon.